Andrew, when you advise clients, you often tell them that whether or not their bid gets accepted, it isn't always going to be about who's the highest bidder. What other factors should prospective bidders for a target keep in mind?
Well, first, thank you for having me today. I think that more often now than in the past, deals are typically shopped through an auction process. Fewer and fewer deals are being identified on a proprietary basis. And what we see now are many buyers often looking at the same asset. There's a great amount of cash and other financial resources that are looking to deploy it in the form of acquiring companies. So what I've tried to advise my clients is that they need to differentiate their bid and their proposal from the many other proposals, because at least a handful of those proposals are going to come in at or around the same price range. Right. And so, directly to your question, what I try to tell my clients to do is to not simply put a number on a page, but rather to describe the benefits of the transaction to the seller. And some of the things that they can do are to differentiate themselves are to offer equity in whole or in part. They can incentivize the key decision makers, who are often going to be the chief executive officer and other C-level officers of the acquired company following the acquisition, by giving them incentive compensation packages that are tied to the creation of value. They can require the sellers to roll over a certain portion of their equity. And really, the reason for this is because many times sellers are not in complete agreement as to whether they should sell the company and at what price. And they often are concerned about leaving value on the table. In other words, walking away before they've achieved the maximum amount of value that they can achieve for the company. And so by enabling the sellers to retain a portion of their equity or to be compensated based on the creation of additional value, that sometimes makes their decision a lot easier, rather than walking away for a specific price.
Right. How important is it to lay out a timetable for when a prospective buyers will complete certain phases of the deal preparation, such as due diligence, antitrust filings, et cetera?
One of the, I would say, major concerns of sellers when they're deciding on a particular buyer is whether that buyer is going to be able to consummate the deal, or whether they're going to waste their time. And many deals that get started don't end up getting done. I would say the biggest reason why deals don't get done, or a major cause for deals not getting done, are that they drag out. Yeah. And the more time that people have to consider other options, and the more time that goes by before they consummate a deal, the less likely it is to happen. It's sort of reverse inertia. If you have a timetable that shows, first, when you're going to complete your diligence, second, when you're going to have the purchase agreements, third, when you're going to have the regulatory filings made, for example, Hart-Scott filings with the Department of Justice and the Federal Trade Commission, or, for example, when you're going to solicit shareholder approval, all of those things, identifying all of those major obstacles and requirements, and indicating by when you're going to accomplish them, gives the buyer a great deal of comfort that this particular seller, is going to complete this deal.
When you're creating that timetable and breaking into separate phases for your deal preparation, what needs to come first and then what follows?
Well, I think you need to break it into two components, business and legal, right? And I'll speak primarily to legal for obvious reasons. From a business standpoint, the first thing that buyers need to do, even before they submit a bid, is to identify the key concerns, the key diligence issues. To the extent we can get comfortable with those issues before the bid is submitted, that's great. it doesn't always happen. Most times bids are submitted, the buyer will conduct extensive due diligence and then proceed to definitive documentation. But the major sort of gating items, if you will, are accomplishing due diligence, identifying by when purchase agreements or merger agreements are going to be submitted, and identifying a target for completing all of the transactions.
Certainly, buyers can structure a deal as far as their actual offer, from an all-cash offer, a mix of cash and stock, or all stock. What factors would play into how you make that offer?
Well, I think the first consideration is a financial one for the buyer. Many companies, particularly in the technology area, for example, have a substantial amount of cash on their balance sheets, and they need to deploy that cash. So that is, if the acquisition is the best alternative use of that cash, then they probably want to use cash, because issuing equity in connection with the transaction is dilutive to the other shareholders. Right? The other factor, though, goes back to what we spoke of earlier, which is how important is it to the buyer to continue to participate in the upside of the company following the acquisition. As I said, oftentimes it's very important to the buyer to continue to participate. They may have or sell it, right? They may have an offer on the table for $1 billion to sell their company, but they may also be thinking, look, with this acquisition comes a panoply of resources of the acquirer, and those resources take the form of financial resources, customers, branding, and so on. And so the sellers will often see a great opportunity with the acquisition. In those situations, those sellers very often won't want to just take cash and walk away. They're going to want to participate in that upside and continue to create value. For the same token, the buyer is going to want to provide substantial incentives for the management team that's coming along with the company, which it inevitably does, to see that the company that they've acquired continues to achieve the success that they hope it will achieve.
Got it. Okay, Andrew, thanks so much for your time.
Thank you so much. I really appreciate it.
Sure.
All right, have a great day.